Hello, and welcome to myfinanceteacher.org. Let's have a quickie video looking at precious metals, and we're going to start with the US dollar. And the daily cycle on the DXY is now 40 days old. Usually these cycles last for just about 2 months. And as the dollar index has already poked above the Bollinger Bands a couple of times and since then has been dropping down over the last few days, we the RSI have already been into overbought area. I think it's pretty likely that the ongoing daily cycle, short-term daily cycle in dollar has already topped, and as these cycles usually last for about a couple of months, perhaps we'll see another couple of weeks of downward momentum in the US dollar. The lower part of the chart shows the correlation with gold, and it's negative, meaning that declining dollar over the next perhaps couple of weeks will likely be positive for gold. What do we see on gold? In my previous update on gold, I was expecting gold to drop as it did over here from around 1730 all the way down below 1700. But as I also mentioned in that previous video, I thought that there was a pretty strong chance that gold would continue even further down as the ongoing daily cycle was still relatively young, and I thought that the cycle already topped over here in the middle of March. With a relatively strong bounce so far, it's actually possible that we've seen a double bottom for this ongoing intermediate cycle, which is so far relatively short. It only started at the very end of November, and usually these cycles last for half a year. But as the previous cycle was really unusually long, perhaps the ongoing cycle will be relatively short, as the sentiment on precious metals is already pretty low, as we'll see in a moment. So there is a good chance that the ongoing intermediate cycle might turn out to be a relatively short one. Perhaps it already finished recently with this double bottom. So there is right now a pretty good chance that we've seen the low for the intermediate cycle and we're about to start a new intermediate cycle that will bring gold back up to that round number of $2,000 per ounce. The last couple of confirmations for a new trend would be a higher high. As you see, over the last few months, we've seen a trend with lower highs and lower lows. And to break that trend, gold would have to break above the most recent high. That's somewhere around 1757, 1760. That's actually also pretty close to breaking above the resistance at the 50-day moving average. So if that will happen, that will be one of the last confirmations that finally this painful trend of lower highs and lower lows is finally over. Looking at miners, GDX is at the moment making that one of the last confirmations with a higher high versus that high in the middle of March. And one more confirmation from GDX would be breaking above this downtrend line that it's been respecting over the last several months. So if GDX breaks up to somewhere around 34.8, that would confirm the break of this downtrend line on the miners. Hence, miners are already diverging from gold with the attempt to make a new high right now, while gold still needs to rise by another $15 to $20 to create that new high. And looking at silver, after outperforming gold for quite a while earlier in the year, I've mentioned in the previous video that silver was likely to lag behind gold a little bit, and that's when I mentioned that I dumped a lot of my silver positions. Although I'm still holding right now 12% allocation to precious metals in the model portfolio that we're tracking with the members at myfinanceteacher.org, as well as in my personal portfolio. Once I see a couple of more days of confirming new uptrend in precious metals, I will substantially increase that allocation from around 12% right now to possibly 20% or more. The silver is positive, it's breaking above the 200-day moving average today, so let's see by the end of the day if this break above the 200-day moving average is sustained. And last, looking at the market optimism on precious metals, this is the Gold Optimism Index. We see that over the last few months, since summer last year, optimism has dropped quite a lot, all the way down to low 40s most recently. Although there are times in history when intermediate cycle lows bottomed with the optimism index all the way down at this green line around 30, but looking at the most recent 3 intermediate cycle lows over here at the end of 2019, in spring 2020, and in late 2020, These intermediate cycle lows took place when the optimism index was somewhere around 50. Currently we are below that. So although there is not much blood flowing on the streets, gold is far from being anywhere popular right now, and perhaps this is a relatively low risk opportunity at the moment, especially if in the next couple of days we'll see those confirmations that we've just mentioned. And this concludes this quickie video. For more details on a range of assets, join us at myfinancesteacher.org. As you see here, we'll look at cryptocurrencies, the general stock market, a range of different commodities, precious metals, energy, and so on. Have a nice day and good luck in your trades.